Hello traders and welcome to another video review. Today is Friday, September 2nd, 2022. Let's find out what is going on today on the Forex calendar. As you can see, the most important events of today is the mostly anticipated non-farm payrolls. And this, of course, is the US labor market data. Both non-farm payrolls and unemployment rate are scheduled for release, as usual, 2:30. So what do we have here? The ADP reading on Thursday was kind of below the expectations and disappointed the market participants. And today's reading of non-farm payrolls is forecasted at the level of 300,000 participants. However, the previous reading was 528,000 people. So if the reading will be better than the forecast, for example 400,000, the market might be pleased with the actual number. However, if we fall below 300,000, the market reaction might be much more severe, because that would mean the global, the US recession and the economic situation and the labor market situation might be worse than investors thought. And the Fed will hike sooner than later, another time, and the interest rate might be even more than 3.5% at the end of the 2022. Unemployment rate scheduled for release at 2:30 as usual, is forecasted at the level of 3.5% and supposed to stay at the level of the previous month of August, 3.5%. This is the lowest rate in years in the US, so if it will jump to 3.6%, for example, that will not be a good sign of any kind of a recession termination or like a reversal in the short term. So please stay focused, stay vigilant today at 2:30 when the non-farm payrolls and unemployment rate data from the US are scheduled for release. The market participants are waiting for this data, and the volatility might be extreme. And this is why I think the volatility will definitely increase during this time. Let's find out what is going on the technical part of this this situation here. Let's start with, I guess, euro dollar. Euro dollar, it will be definitely reacting on the non-farm payrolls data as usual. And what do we have here on the US dollar 4-hour chart? 240 minutes chart. We got this consolidation here, the whipsaw move, up and down, up and down, up and down, and this move has been consolidating just around the parity level with the occasional spikes towards 1.0090. So there is a 38% Fibonacci retracement level at 1.0078. However, the market was capped twice already during the rally towards that level, and today it is much closer to the parity level than to any levels above it. So we have a waiting game. We have a waiting game on the euro dollar for the NFP payrolls. Of course, if the payrolls will be worse than expected, market will start to sell the euro and buy the dollars. If the NFP will be better than expected, the risk on mode will be played on the market. And then, of course, euro might have a chance to break above the golden trend line, above the 38% of the Fibonacci retracement of this wave down, might hit 50%, 1.0133, might even hit, let's put it on the chart, might even hit 61% of the Fibonacci retracement. This level is located, as you can see, at 1.0188. So that might be at least 188 pips rally today, only today. If the data will be definitely very surprising for the investors. So please keep an eye on the euro dollar behavior today. As long as we trade below the trend line and definitely below 61% of the Fibonacci retracement, the outlook remains bearish. So that's the euro dollar, and let's find out, of course, what is going on the US dollar index. We've been looking at this index for whole trading week. This today is, of course, the Friday, the last day of the trading week. 240 minutes, so 4-hour chart of the US dollar index, and as you can see, we have a new high. The high was made at 109.95. Now we are pulling back towards the nearest technical support, 109.27. The outlook remains bullish. The momentum is very strong. It's not extreme momentum. The market is not on the extremely overbought condition. It's not yet there. Now the level is around 55 points, so it's nice, strong, positive momentum, and the uptrend might be continued higher with no problems. However, of course, the market reaction on the NFP 500 data will be completely opposite than the euro dollar. If euro dollar goes up, dollar index goes down. If dollar index goes up, euro dollar goes, of course, down. So that's the situation here. The bulls are still in charge of this market, and as you can see, they are pushing it higher and higher and higher. That might have been the biggest correction so far, minus 4.26%. Now we have a new high. The sky is the limit for the US dollar. Is being bought across the board for almost the whole week, and the previous week, as far as I remember, the situation was the same. So US dollar is going up, no problem with this uptrend here. What is then doing S&P 500? The S&P 500 is moving lower as expected, as anticipated. And what happened here? We broke below this high, as you can see here, from the high of the wave A, 3,900, and it was 7, I guess. This is the 3,943. I'm sorry, 43, of course, broken. So we stayed with our initial scenario A, B, C to the upside, almost 200%. Wave C had almost, because there was like a, I don't know, 25, 30 points miss to hit the 200% Fibonacci extension for the wave C, of course. Then we have a pullback, test of the demand zone, bounce, and big sell-off, and extension and continuation. So this is a sequence that is being very, very negative for bulls, right? We broke below major levels. Of course, we got this level here still to keep an eye on. The loss for the wave B, 3,737, 3737 for to be more specific. And now we are waiting, of course, for the LFP. Again, the situation is the same. If US dollar index is going up, S&P 500 will go down. If S&P 500 will go up, the US dollar index will go down. So please keep an eye on this market correlations. Right now, it's obvious bears are back in charge on the market. They are in control of the price. They are pushing it towards the extremely oversold conditions around the level of 3,900, and it looks like they won't give up that easy. Now this zone is back to red. Why? Because now it's, of course, the supply zone. It's been tested many times. It's a valid zone. Market recognize it, so it will stay on our chart, and this of course lines to be to keep the things as usual will be, of course, red. So this is now the zone, and this is the technical resistance, upper technical resistance and lower technical resistance for the supply zone. So right now we are waiting for the data of the NFP payrolls, and it looks like the market is positioning itself for another wave to the downside. Please keep an eye on the support of the wave B. So what is going on the oil was yesterday. I'm talking about gold, of course. What's going on gold? All the analysis we are doing today is, of course, being done because of the NFP. So I will be focused on these markets that of course are moving together with the NFP. And the gold is another market that might spike today or might sink today. Of course, it will depend on the data and market reaction on data. Please keep an eye on this market because we sink almost towards the lows of the July 2022. This low is around 1,686. The recent low was made 1,688, so only $7 away from this low. So right now it's clear the market is under the bearish influence, under the bearish pressure. This is the false breakout, test, bounce, and breakout to the downside. So bearish pressure is really strong. We recently hit the extremely oversold market conditions on the 4-hour chart. We are trying to bounce, but again, this market is still under the control of bears and it's being pushed lower every time they can. They're using this situation to sell the gold by the US dollar. So we might even see a test of this level here, 1,680. This is the low from the 21st of the July 2022. And as you can see, the market is still being pushed down. This pin bar might be good for a pullback before the NFP. Then of course it all depends on the market reaction, but I will not be surprised if during the extreme volatility period the levels of the 1,680 will be taken out. So that's the gold market. And I think we should take a look at the last market that might be doing extreme movements today, and this is of course the market of the US dollar to Japanese yen 4-hour chart, and the wave C just hit another extension level of 161% at 140.21. Local high, let me just zoom in. The local high was made at 140.41, so that's about 20 pips above. Oh, it's even higher, 44, so that's 23 pips above the 161% extension level. And please be careful with this market because it's very stretched. It is extended to the upside. Very sharp move from the levels of 131.50. We already traveled 900 pips, 850, 900 pips. So we need a nice correction here. So if the US dollar to Japanese yen starts to move lower here, we might even see very nice sell-off on the US dollar to Japanese yen. And so this is our plan. ABC correction to the downside is now invalidated because we broke above this level of 139.38 and hit 140.21. It's more likely right now like the correction ended here 130.47, and this level, this movement here is more likely 1, 2, 3, 4, 5 to the upside. So what do we have here is just another impulsive wave to the upside. So that's the wave 3, and that's the perfect target for the wave 3. 131% of the extension. We need wave 4 and we need wave 5 to the upside. So this is of course the very small cycle here, and we might see after the correction nice rebound and the development to the upside on the US dollar to Japanese yen. So please stay focused, please stay vigilant at 2:30 for the key data of the week and maybe even for the month in form of the NFP payrolls and the other labor data from the US. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.